Ya Muallim Abu Lebda, if you allow me, let me introduce the most grand Muallimin. They represent the Chamber of Commerce of Drugs and Hashish in Greater Cairo. They are from right to left. Al-Muallim Hantira of Al-Gayarawi Masr al-Dima. Al-Muallim Ashokriya al-Blondia of Al-Sharipia wi al-Zawaya al-Hamra. Al-Muallim Abu Duka of Al-Hassaniya wi al-Waliya, and Al-Muallim Abu Ropa of Al-Kitkat wi Mbabawi Polak al-Karur.
Look at Kalusha, I am Al-Muallim Abu Lebda, the most unpredictable criminal in the entire country. The people you just introduced do not look like real criminals, or Grand Muallimin at all. I thought that I would meet with criminals like Karewi Rashadwi Badawi wi Al-Muallim Manausa. You are an idiot. Idiot and a moron. Tabin Lak.
I am not an idiot or a moron, Ya Muallim Abu Lebda. I am your closer assistant. They are good, but may only need to know some of your teachings and tricks.
Look at Kalusha, now crime has become a specialized science. It is called criminology. Ask them about the latest training course did they get and who delivered it to them?
The latest training course they got was about the cost flow methods of hashish and other drugs inventory. Lectures were delivered by Missing Shara, Al-Lempi, and Sayyadahi of Asher schools.
I only know two of them, Sayyadahi from the orphanage and Al-Lempi from the prison. Is Missing Shara the full sister of Miss Murfat?
Yes, she is. Do you know her?
No, not at all. As to the training given lately to the attendances about the inventory cost flow methods, I want to add few comments.
Our full attention is devoted to what you are going to say, Ya Muallim Abu Lebda.
The latest training covered 4 of the inventory cost flow methods: 1. Specific identification method, 2. Average method, 3. FIFO method, and 4. LIFO method. To cover all methods, we need to cover the 5th one, which is the retail inventory method.
Please brief us on this method.
This method is a very effective means of estimating inventory value. It is used for 1. Interim and annual financial statements in accordance with the generally accepted accounting principles, 2. Federal income tax purposes, and 3. Verifying year-end inventory and cost of goods sold data, for example as an analytical procedure by an independent auditor.
Do you have comments on the different inventory cost flow methods previously presented by the other lecturers?
Yes, back to the example of Salah and Abdel Fattah company previously mentioned by the other lecturers. The total cost of goods available for sale of $3,060 is divided differently between the ending inventory, A, and the cost of goods sold, COGS, depending on the cost flow method used. Under the moving average method, A is $760, and COGS is $2,300. Under the weighted average method, A is $816, and COGS is $2,244. Under the FIFO method, A is $740, and COGS is $2,320. Under the LIFO method, either periodic or perpetual, A is $800, and COGS is $2,260. Thus, if you arrive at the ending inventory using one of the inventory cost flow methods and subtract it from total cost of goods available for sale, you will get the cost of goods sold under the same method. Accordingly, the inventory cost flow model selected should be the one that most clearly reflects periodic income.
What are the main features of the FIFO method compared with the LIFO methods?
An advantage of FIFO method is that ending inventory approximates current replacement cost. A disadvantage of FIFO is that current revenues are matched with older costs. However, under LIFO method, management can affect net income with an end-of-period purchase that immediately alters cost of goods sold. Under LIFO method, if fewer units are purchased than sold, the beginning inventory is partially or fully liquidated and old costs are matched against current revenues in the year's income statement.
Are there particular consequences of using the FIFO method or the LIFO method in a time of rising prices? I mean a time of inflation.
Very good question. In a time of rising prices, inflation, use of the LIFO method results in the lowest year-end inventory, the highest cost of goods sold, and the lowest gross profit. The LIFO method assumes that the oldest goods purchased and therefore the lowest priced are in the year-end inventory, and the cost of goods sold consists of the latest goods purchased and therefore the highest priced. The results for the FIFO method are the opposite of those of the LIFO method. It results in the highest year-end inventory, the lowest cost of goods sold, and the highest gross profit.
Thank you, Ya Muallim Abu Lebda. Do you have any other command?
Yes, ask Al-Muallim Shawkriya to wait for me in the storeroom.
Sorry, I cannot help in this direction. It has never been my path. Period.